If you're waiting several weeks for a bank to fund your deal, you are already missing out. In this video, I'm going to explain exactly how to go about getting financing fast. We're talking about closings in 7 to 10 business days, so you no longer miss opportunities to grow your real estate portfolio. I'm Mike Chadwick, and I work for asset-based lending, and we're in the speed of money business. And what that means is we make fast-moving bridge loans that close in 7 to 10 days on average for properties across the United States for fix and flips, the first half of the BRRRR strategy, let's say, and we do a lot of ground-up construction. We move quickly, and that's the name of the game, folks, is speed. In this video, we're going to talk more about how much speed matters and how companies like asset-based lending get it done. Let's face it, you can be a market expert, know the market so intimately that you are absolutely certain that you are getting the steal of a lifetime on a particular property. But if you can't close in 10 days, someone else will close and you'll lose out. You're gonna hear me talk about common sense underwriting and the advantage that hard money has over traditional lending and bank funding sources. And it's so true. I mean, we look at really three things when we look at a borrower. We look at your credit. We wanna make sure that you have a minimum credit score of 660. We're going to look at your liquidity position relative to the project size. Do you have the down payment? And do you have a little working capital? And then we're going to look at your experience. We're going to want to make sure that you can execute the strategy. It's just common sense. The more actually that you've done in said strategy, the better the rate will be, the more leverage we're willing to give, right? So the less risky the deal is with your profile in it, we're going to reward that experience. We're going to reward the leverage with lower rates. It's just as simple as that. And I love that about this business. You're not going to see us get into the weeds as to where you work, how much you make, what your debt to income ratios are. It's just not what we do. On top of that, we don't report to credit agencies, which makes it even better. So not only are you closing the loan fast like we've talked about, but you're getting the benefit of insulating your personal credit from the deal. So yeah, we're going to pull credit, but that's the only time your credit's going to be affected, and if at all. When it comes to the obligation, the debt obligation, you're a guarantor on the loan, but we're not going to report that loan to credit agencies that are going to impact your credit. So the fact is we're lending to an LLC. That's another advantage because it isolates you personally and it doesn't drag all of your personal financial condition into the mix. So there's a huge benefit to that. So, common sense underwriting prevails here. The deal makes sense. The leverage makes sense. Based on the borrower profile, we close. The loans are approved in 24 hours. We're often running to a closing, expecting to close within 10 business days because it's what we do. We're looking at fix and flip BRRRRs all day long. I don't think the banks can say the same. They're looking to do less work. This hard money, this bridge lending business where you're doing construction draws is high touch. Bankers are lazy. We're looking to make this process faster and smoother every single day that we're open for business here. Whether it's through technology or virtual draws. So we have the ability to innovate in the space. It's come a long way since the financial crisis because we fill a void in the marketplace. And it's really just all about common sense underwriting, fast moving deals, not having to report to credit agencies and insulating a borrower's financial condition from their investments. So let's talk about what you need to have ready for you when you approach a hard money lender like myself. And as you would expect, it's super simple. It's very streamlined versus what you would expect with a bank. And so by that, I mean, we're going to collect a purchase and sale contract or an accepted offer, right? We want to make sure that we're moving forward into underwriting with a deal that actually is locked in. You're not, hoping to win the bid on a property. You actually have an accepted offer, a purchase and sale contract. The next thing we're going to need is a construction budget. If you're doing construction, which 95% of my bridge loans are, we're going to need to see a scope of work that outlines exactly what you're going to be doing for renovation, right? We're going to need to give that renovation over to an appraiser eventually so that they can use that to determine what the after repair value is of the property, as an example. So we're going to need that to understand the scope of the project. So you're going to have to do a little bit of due diligence. That's going to be the hardest thing, I think, for a borrower to prepare in advance of coming to a hard money lender. And that's having either the expertise or calling in the expertise in a GC to come in and look at the project and build out a budget that accounts for the entire scope so that it can be factored into underwriting and then ultimately the appraisal. We're going to need to know that you have, an idea of what the property's worth after it's repaired. And that can be, two things: a pro forma on a multifamily that goes through and shows the projected income today in post renovation or post lease up after renovation. Same thing goes for maybe a 1 to 4 family or a single family, where we're going to want to make sure that you understand what the value is post renovation. So you're going to need comps. You're going to need to have spoken to a local real estate agent. You're going to want to make sure that you're in fact buying the property at the right price based on its renovation. And in order to do that, you need to determine really what the value is going to be at the end of the day. And I'll talk more on this channel about reverse engineering the numbers, knowing what houses are worth, knowing that you're going in, seeing the value there going in, and understanding that the renovation, it all sort of reverses back down to what you can pay for the property in the end. So hopefully by the time you come to me, you know what it's worth, you can comp it out. And obviously in order to get it into that post rehab condition, you need to have the ability to execute the rehab. So all these factors, right? So we got scope of work, we've got ARV so far, and we have purchase contract. I'm gonna ask you to fill out a very streamlined application. It's really onboarding you, your contact, and the deal information. We really don't ask for sensitive information on our applications like social security numbers, birth date, because we don't run credit as part of our approval. We get the loan fully approved, and then in processing, we'll ask for you to authorize us to pull credit and background. So nothing too invasive up front in our application process, but it doesn't mean the loan's not fully approved. It just means we trust the information you provide, we approve the loan, and then we move into processing and we verify the information. And then lastly, we're going to look at your experience. If you're executing a fix and flip or a new build, the more experience you have, the better. You're going to get better rates. Let's say as a 5 experienced borrower, you may get rates in the single digits on a new build versus somebody who has no experience might be in say the 11 or 12% range. So we're gonna want to make sure that we drill down on your experience, understand exactly what you've done on permit or on title. We're going to aggregate those, and then we're going to reward that experience with lower rates and higher leverage as a result. So the better prepared you are in understanding the items that I need is going to only help me move faster through the process. It's just that simple. Just to reiterate and to go back through it really fast, we have purchase and sales contract or accepted offer. We're going to need to see a construction budget, preferably on our template, but we'll take yours. We're going to want to make sure that you understand the exit strategy. After repair value, we're going to look at the budget closely, obviously in relation to the after repair, and then we're going to focus on your experience. We fund first timers all day long, but we're going to reward experience for those who have it. So we're going to make sure that you put it on the schedule and put that in front of us so that we can understand it, approve you as an inexperienced or experienced borrower right up front, issue you terms, and then obviously we close on those terms subject to verification of your experience, pulling credit, etc. It's a very streamlined process. It doesn't take very long. In fact, it takes on average about 24 hours for me to quote, collect the information, and then ultimately get you through underwriting and fully approved and on your way to a closing. So we move quickly. Again, it's the speed of money business. So everything, when you come to me, you can expect it's an abbreviated or streamlined version from what you deal with a bank. But there are things that we need to do and check boxes on, and now you know what we need. So let's talk about why speed matters. And what we can do is just look at recent history. If you were out as an investor trying to opportunistically buy a property at or below market, you've had to come to the table with a cash closing or a quick 2-week closing backed by a hard money lender. It just was what it was. The sellers had their ability to pick, and if you were going to separate yourself from the pack, you needed to move quickly. Lenders like us, we know that. We know we're in the speed of money business, and so we offer a product that fills the void left since the financial crisis by the banks. The banks are overregulated. They have all this red tape. They're going to look at you and do what I like to call a financial proctology exam on you, and they're going to want to know everything about you, and that takes time. We don't care about your financial condition outside of credit and liquidity. We're not going to care about your employment. We're not going to care about your debt to income ratios. We just want to know that you can execute the strategy. Within 12 months, you're going to be able to pay us off. The fact of the matter is you can look at returns too. I mean, if you're looking to only do deals that can be funded by a bank, well, then you're probably amongst the owner-occupant pool bidding for properties that are overpriced or priced to be lived in. They're not investor profile deals. So the fact is you need the ability to execute on these different opportunities, to come in and to buy it right. And that means to buy it fast, and to buy it with an institution behind you that has a track record of closing. Sellers agents are going to be looking for a backup that says that your lender's legit, that you have funds available to close. And the fact is, we close quickly, and hard money lenders have really filled a void in the speed of money space. It's just what it is. Banks are just not capable of getting investors into transactions, in the resi space, the small, 1 to 4, 1 to 10 type unit space where the expectation is not that of institutional players, where you're expecting 30-day due diligence periods and 30 days to close. These are for fast moving, bank foreclosures, short sales. These are, houses that have had a fire, that need to be completely renovated. These are projects where investors are looking to capitalize on buying the property at the right price. In order to do that, they need financing behind them that can close quickly. If you got a deal that you're ready to fund now, or you're just simply looking to learn more about our programs and get pre-approved so you're ready to go when you find the next one, let's talk. Link is in the description. I love to talk deals. So yeah, reach out, don't be shy. And as always, comment if you have any questions on the video itself. Maybe you don't have a deal. And I appreciate the likes and the subscribes. And I look forward to the next one, guys. Thanks for watching.